Good afternoon, everyone. Welcome to Mineral Wealth. And today we're so lucky to have Shane Williams. He is the CEO of West Red Lake Gold, and they're located in Canada. He's going to tell us more about, he has two projects in Canada. And I want to just fire the questions, and this is informal. Shane, welcome. We're honored to have you today. First of all, I want to let you know that.
Thank you very much, John. It's great to be on and great to meet your subscribers.
Thank you, Shane. You know, we have avid stackers of gold and silver, and they do so to fight a variety of forces out there, like inflation, we'll just say. And wealth preservation is a big reason, and there's some new reasons emerging, but we want to keep positive here. And the reason I thought you'd be a wonderful guest today is because I've been reading a little bit. I'm sort of eavesdropping on what's going on in Canada. And we thought we would reach out to an executive director, excuse me, a CEO of a gold mining company. And I want you to tell people that are just in the habit of stacking physical silver and gold products on a different way to play gold.
Yeah, perfect, John. Yeah, look, I'm a big believer in gold and a big follower of the macro trends that are there. Like all your viewers, I am concerned about the future and stacking physical and gold and silver. But I do. One of the issues that comes up is as that gold price is going to move and silver price, as we all believe it will and know it will over the next number of years, there is another way to play that and get leverage to the gold price. Yeah. So over the last number of years, the gold miners have taken a lot of a hit as the gold price goes, and they're very, very undervalued. There's deep value in the industry at the moment. And so another way, as well as stacking the physical metal, is also to play the game about with the miners. And so as the miners are, obviously, as that gold price moves up as you can see there, over the last two bull runs that it had, we see as that the gold miners move even a larger leverage to that gold price, and the junior gold miners and the developers really get huge leverage as you move up as the gold price moves over the next number of years. So there's also an element of, as well as the physical, there's also the opportunity to get a lot of leverage and upside with the miners as well. And so that's kind of our big strategy over the last number of years. As you probably aware, some of the company strategy we put together, which it's a copy and paste of the previous time. Back in the 99 to 2003 sort of run up, or in the early years back to 2000, there was a huge run up in gold. And so, with that, a group of us got together with as you can see there, Frank Giustra, and some other backers. And so they built a company at the time called Wheaton River. Wheaton River also developed and grew through an M&A strategy, and very quickly grew and eventually came a company called Goldcorp. And over that period of time, over that 5 to 10 years, Goldcorp became one of the biggest gold mining companies in Canada. And to give you a sort of the numbers, as people who got in at Goldcorp at like 40 cents, 50 cents, Goldcorp went to $15 at one stage. So you have a huge leverage to that gold price with the company as it's growing. You buy gold today, you are going to get a move in gold up as it is from today's value from up above 2,000, maybe 3,000, maybe even higher. But again, the gold miners, you can get very, very good gains of a couple of 100% gain in the prices and leverage that gold. You're still playing the same team with the gold and inflation, but you're just getting a lot more leverage as that gold moves through the gold miners. Really.
Okay, and how did your background, I know you had worked in some other mineral resources, including oil, and spent some time in the Middle East, including Saudi Arabia and even around the Mediterranean Sea. And explain how you met Frank and sort of how you're recreating this playbook, the Wheaton River Goldcorp playbook? Because that's intriguing to me and to our subscribers.
Yeah, look, I've been in the industry over 25 years now, in the mining industry, and have a lot of deep technical experience. I've worked in all elements of the industry. I've worked with large companies. I've worked with small companies. I've worked on the operations side, the project development side, the junior side. So really, and I've worked all over the world, as we've talked about previous. I've worked in different countries, different continents, building mines. And key element of that is looking for opportunities with deep value and taking those projects, turning them around, and then getting those back into production. You know, a lot of people play the early exploration phase, and a lot of there's the majors with our operators, but the real value is in getting projects that have been in trouble or are in trouble, taking those projects, bringing in a team, building that team, and then using that team to develop these projects going forward. And that's really, your investors also get not only the gold play, but also a value. You know, there's a value play there as well. So they get access to both. Some people just play the gold play and grow the mine, but if you can combine the real deep value play with the opportunity around gold, then I think you have a really good sweet spot that not many operate in, and a real opportunity for your listeners to grow.
Yeah, it almost sounds like if you could find some gem in, let's just say, a hot real estate market, and you found the one dilapidated or two properties, and then you can go in there and rehab it, there's tremendous upside. What is specific about, I think I was on your site recently, I believe I recall names like Madsen and Rowan, am I correct?
Yeah. We, again, you know, the famous investor Warren Buffett would always say, the time to invest is when there's blood in the streets, really. And so this is, you know, we've seen this opportunity now. We picked up a project called the Madsen project, and the project had gone into the CCA process, which is a bankruptcy process here in Canada. And there's a lot of issues why, but also COVID affected the project. A lot of issues with mining, and so it went into the CCA process. And this project has had over $350 million spent on the project. That's a lot of capital. It's fully operational. It has a full operational mill. It has permits. It has tailings dam. It has all the challenges that are typically in mining, and most of those are eliminated now as you move forward. We managed to go in, negotiate a deal, and we bought it for $6.5 million. So real pennies on the dollar sort of analysis and transaction. And the idea now is to we brought in a very good technical team. We brought in some key people who have done the similar sort of model. Some of our board members are Tony McCooch, who people might know from a company called Kirkland Lake. And Kirkland Lake went on a similar run to Goldcorp. It came from a very small producer to being one of the biggest companies in Canada. It sold for around $10 billion. And so we have built that team who have done this before. And the idea is to recreate this model. We have a project called the Madsen project that has 3 million ounces. And we have another project called Rowan property. It has 800,000 ounces. So we have a lot of ounces in the ground. We have a mill and a mine ready to go. And the idea is to leverage these over the next number of years, do the work and grow from the project, and use this as a first stage to grow a big company and become a mid-tier to a large producer of gold. When that, in parallel with that gold run that we believe is coming, then you get huge leverage to that project. We're in Ontario, which is the Red Lake District of Canada. This Red Lake District of Canada is very famous around the world. 40 million ounces has been already mined in this area. There's lots more gold there. And the resources and the mines are very deep and very rich, high grade, 10 grams sort of material. This is high grade area to play in. This is why we like this area for this strategy.
You know, and our subscribers are just now starting to get a sense of ore grade. Do you mind elaborating on how that's measured? It's ounces per ton, or is it grams per ton?
It's grams per ton. You know,
okay.
A long time ago it was ounces per ton, but it's now grams per ton. So to give your viewers a kind of a scale, a typical open pit mine that's out there is an average of around 1 gram per ton. So, that gives you the sort of scale that a typical underground mine is around 5 to 6 grams. So, you're talking grams per ton. Our projects are around 9 to 10 gram per ton. So they're considered high grade underground mines. And this region in the Red Lake of Ontario has a lot of these high grade mines. And that's why we want to go in there and access this potential, really.
And what sort of tools do you all have to ascertain or measure and do this sort of research to see the mineralization? Since you don't have X-ray eyes, I'm just trying to get our subscribers a chance to understand what your typical day of a geologist would be like.
So the early stage projects, ours is very advanced, but an early stage project would go into this area and would do a lot of drilling. So you use drill rigs to drill out the whole deposit. And you get from that, you get samples, and you get small samples of the deposit across the whole deposit. And you get those assayed and get them certified and get them measured. And then when you get all that data, actually, John, you put it together and you build a geological model in a computer system. And then from that, you can estimate the number of ounces in gold and how much gold is in the system. And when you do that and keep drilling and defining it, then you come up with that quantity of 3 million ounces, 2 million ounces, 5 million ounces, whatever that volume of gold is in that area. So that's kind of the early stage process of a lot of drilling and taking samples, measurement, building that structure and that geological model, which gives you the value of the gold, the number of ounces in the ground.
And do you mind repeating what that number is in terms of the scope, or what you think how vast or rich this these typical broken down per each mine or total between the two?
Yeah, we have the Madsen property, which is our satellite property exploration, and we have 800,000 ounces there at 9 grams. So it's a high grade mine with lots of gold. So an average grade of 9 grams, 800,000 ounces of it. So, and then we have our Madsen property. We have over 2 million ounces in that property at an average grade of around 7 grams. So, very high grade deposits and a lot of gold. That's kind of the key in this region. And then when you put that on top with your own mill, your own mine, your own facilities, your permits are in place, you can get quickly to cash flow very quickly from a project like this and be generating a large amount of cash flow, maybe $60 to $70 million a year. And as that gold price is running, you're generating higher and higher levels of cash flow. The value of the company will get reset very quickly. That's how you get that leverage to gold price.
That's extremely interesting, and it's very promising. At Mineral Wealth, we're probably only going to talk to people that have this sort of potential, so people aren't calling me in the wee hours of the evening saying, why did you recommend? We're not really making recommendations as much as we're putting our subscribers in front of the right people. And I think I've heard you in other podcasts discuss how there is sort of a crowd of people out there that are also in the mining industry. But what do you think is the best way to your core competencies that position yourself against some of the maybe people that are, I don't like to use the word inferior, but their projects just aren't as robust? I mean, I've just seen they don't have that kind of ore grade. They don't have, that way our investors have a way to come up with a methodology. Shane, what would that methodology look like if you were to just give some pro tips, not financial advice?
No, John, and look, John, that's a very valid point. Look, your investors, as you said, you're starting to move in and get interest from the miners and people interested in that. I think it's very important for people to look at the team that's in place. A lot of people, the team that you invest in behind the company is very critical, because the team is key, because if they've done it before and they have that experience, you can see that they're doing it. They've done it before. There's experience there. So that's key to me. And that's what we wanted to work with West Red Lake. We wanted to put a team together, like Frank and the team are the backers who've done it before. Our board members have done it before, and we've done it before. So that's key. Even never just for West Red Lake, but for any mining project, you need to see the people behind it. Make sure they have a track record. They've done it before. That gives you a level of trust. They know what they're doing. I think that's key. The other thing that's really key is the projects themselves. High grade is the key in this market. The high grade are projects that potentially will get moved forward, will get advanced, will get bought, will get developed. The higher the grade in the gold industry in particular, the better the project. You've lots of projects out there, but if the grade is not above a certain level, probably in gold mining open pits, you'd want over 2 grams. In underground, you want over 6 or 7 grams. So, these are the sort of projects. If you have the right people, you have a good high grade deposit. And also you need to be in tier 1 jurisdictions. There's a lot of political risk around there in the world. You need to be in Canada, Australia, sort of these tier 1, we call them, countries. And you need to have the scale and size. There's some of your listeners might know Rick Rule talks a lot about this in the investment industry and mining, that it takes the same amount of time to develop a small deposit as a big deposit, but the risk reward is much better. So you need to go for big deposits, high grade gold, a good team, and they're the ones that have a much better track record and an ability to get those sort of run-ups that you talk about.
Excellent answer to my question. And I think we're going to end on this question. And it's in terms of, you spoke to this high grade of being in the neighborhood of 8 to 9 grams, which seems, I can understand why that would be just a much better prize to chase than some of the gold dust that you would see in an open pit environment. How many, we get an idea, you did speak to the technology you have to get a sense of what's below the surface. But how long do you think you can go on a run once you get going on this? Like how, no, I guess that no one has a crystal ball, but is there a way, given your magnetic imaging or the other technologies, for you to get a sense of what's down there?
Yeah. Well, as we do that measurement, really, you understand you design once you understand what's in the gold and the gold in the ground, you understand the volume of the gold, how many ounces you have in the gold. Then you kind of build a process to extract that, underground mining, a process plant to recover that gold, and you design that at a certain rate. So, this project we're designing would be around 100,000 ounces a year we would produce. And so that gives you a runway of 10 to 12 years of producing this gold. So that's a very important point as well. You want projects that have high grade and long life, so that as this gold run, as you can show in your chart there, it takes, once this gold run, second run, or the third run that we're talking about starts, it'll take a number of years to get there. But if you're producing over that time, you get that leverage as you move. So that's another point, a key point as well, John.
Okay. So I guess the follow-up to that would be then your return on investment. There's a certain point where you've then you're playing on the house money. Like I would think after X amount of years,
most of it is within a year and a half in these projects. Our project is return after 2 years. So, that's why you want the life, as you say, after 2 years, you're paid back your money, your investments and everything. And then for the next 8 to 10 years after that, you're playing the leverage to gold price with free cash flow. And then the higher that gold price goes, the more cash flow, and hence the revaluing of that company. So, as I said, and then once you start to do that, you have the opportunity to buy more companies. And very quickly, the amount of gold you do it gets much, much higher and more production. And then your share price runs up. And that's how you leverage the price of gold, really.
Okay, Shane, now for some of the you're very worldly, as we discussed last time, especially given your you grew up in Ireland and then lived throughout the world and traveled throughout the world. But many of us U.S. citizens are a bit too ethnocentric. Tell us where you're at and where the mine's located, and where is West Red Lake in Canada?
Yeah, so our corporate office is in Vancouver,
Okay.
based in Vancouver. Our project itself is based in Ontario, over in Ontario, in a place called Red Lake. It's probably towards between it's just in the center of Ontario sort of area. It's a very, very prolific gold. They've been producing gold in this region since the 1800s. So it's a long, long history of gold, long history of high-grade gold projects. So, and also it's very important as well where the mines are located. You need a history there. You need people there. You need people that's been mining. A lot of these projects, maybe your viewers have looked at, are very remote areas. And so remote areas are very challenging because you need to get people, supplies, equipment, everything into those areas. So again, another key point is having gold and the project in good areas that has previous history, that has a lot of existing mines, so you can get people, skilled people, equipment, operations into that area. So that makes all those areas make key elements, which our project has really going for it. That's why when you understand all these issues, we can kind of filter out a lot of these not so good projects, and that's why we pick the right projects that I think will be successful.
Well, I'm glad you landed there, and it's Toronto's a hop, skip, and a jump away from Buffalo, and then if you're in Central Ontario, it's just, it seems like in terms of backyard risk or jurisdiction, and ore grade and financeability, you've checked all the boxes, and management, of course, your experienced staff. We're so fortunate to have gotten to know you. Go ahead, Shane.
Well, and also the world tends to, a lot of the big macro thinkers talk about the world. It doesn't change. There's just a rhythm. There's a rhythm, and the idea is potentially to follow what's been done before. And so, we think the same of the gold price. The gold price runs up, and then there's a second bull, and then there's a third bull run coming. And people have done this before, like Frank with Goldcorp and Tony McCooch, and the model is the same, really. We're just following a time and trusted model that's been done before by experienced people with the right project. And once that's in place, we know it works. And so the idea is repeat, basically. And so it's a time and trusted model, really, John. And that's important for your listeners, because if they're just beginning to get into the miner space, it's important they're with the right team, the right people who've done it before. I think that's critical. Otherwise, they can, as they say, they can get a little bit uneasy. They can invest in the wrong companies. And, it's important to be with people that they can trust going forward.
Okay, great way to wrap this up. We're going to have Shane back on probably sooner than later. And it's really been our honor to visit with someone with such experience, and be a part of this exciting development in Central Ontario called West Red Lake Gold. And thank you, viewers, for tuning into Mineral Wealth, and we'll be back in 3 days with an update. So again, Shane, thank you for coming on. It's been our honor.
Thank you very much. And I would like the opportunity to say thank you very much, and to your listeners as well. And particularly something I'm very interested in is seeing your listeners and let them follow the journey as we go along. See how much success we're doing, where we're getting, and build that trust with them, so they can follow us and be part of the story effectively. John.
Well, join us, Shane. Have your staff and your social media people join us on Reddit at Wall Street Silver and the SilverDegenClub, and on Twitter, and we'll follow you back. It's like that Stephen Wright joke. It's a small world. I just wouldn't want to paint it, but we can, via the magic of the internet, have these conversations. And again, it's been our honor. You've been really answered a lot of questions that I had. I guess we're never too old to learn I'm a lot older than everyone I've been interviewing lately, so it's good to see these young people come onto our program, Shane. So I'm going to talk to you a little bit off air and then say goodbye to our subscribers. This is John Little and Shane Williams with Mineral Wealth. Thanks for tuning in today.